What's happening, crypto enthusiasts, and welcome back to Bitcoin Bulletin. The news cycle is absolutely on fire, and we've got a packed show for you today. Get ready for some absolutely massive updates that you will not want to miss. We're diving deep into the stories that are shaping the market, so buckle up. First off, a major development out of Asia that has political and financial circles buzzing. We're talking about significant withdrawals from a high-profile Bitcoin conference, and the reasons behind them are raising eyebrows everywhere. Is this a sign of shifting geopolitical tides or something else entirely? You'll want to hear this. Then, we're shifting gears to the market itself. Is the sentiment stabilizing, or are we just seeing a brief pause before the next big move? We've got the latest on Bitcoin, Ethereum, XRP, and Dogecoin, with expert analysis breaking down the charts and telling us what to expect next. Plus, we're digging into a bold prediction about a Weimar Lite decade and what it could mean for Bitcoin's future. Is this the new normal for the global economy, and how does Bitcoin fit into this picture? Finally, we'll break down the latest market movements, looking at Bitcoin's performance against Ether and what the options market is telling us about potential end-of-month gains. All this and more coming up right now on Bitcoin Bulletin. Don't go anywhere. Political ripples emerge from Asia's crypto scene. A significant development is unfolding in the Asian cryptocurrency landscape, as a prominent Hong Kong official and a lawmaker have withdrawn their participation from the upcoming Bitcoin Asia 2025 conference. This unexpected move comes amid reports of specific instructions being issued to avoid interaction with Eric Trump, son of former U.S. President Donald Trump, who is also slated to speak at the event. The implications of these withdrawals are sending ripples through political and financial circles, sparking questions about the underlying reasons and potential geopolitical influences at play. The conference, scheduled for August 28th and 29th, initially listed Eric Yip Chi-hang, Executive Director of the Hong Kong Securities and Futures Commission, SFC, and legislator Johnny Ng Kit Chong, a notable technology entrepreneur, among its keynote speakers. However, a review of the conference website revealed that both Yip and Ng have been removed from the speaker lineup. Sources close to the matter confirmed that a directive was indeed given to lawmakers, advising them against attending the forum if it involved sharing the stage with Trump's son, with the understanding that the intention was to prevent any appearance of cooperating with or flattering Donald Trump. This directive, though not officially attributed to a specific source, was reportedly understood by those who received it. Archival records of the conference website show that both Yip and Ng were listed as speakers as recently as July 14th. This was following the organizer, BTC Inc.'s, announcement on July 8th that Eric Trump would be a featured speaker. His planned contributions included discussions on Bitcoin's long-term potential, its impact on global finance, and Asia's role in shaping future Bitcoin adoption. The timing of the withdrawals, occurring after this announcement and the subsequent directive, suggests a direct link between Eric Trump's scheduled appearance and the decision by the Hong Kong officials to pull out. This situation highlights the complex interplay between international relations, political sensitivities, and the burgeoning cryptocurrency industry. The decision by Hong Kong officials to distance themselves from an event featuring a member of a prominent U.S. political family, especially given the current global political climate, signals a cautious approach to public engagements. The news has generated considerable discussion within the crypto community and beyond, with many speculating on the broader ramifications for crypto conferences and international participation in the digital asset space. But that's not the only major story shaking the crypto world this week. Get ready, because we're about to dive into the latest market sentiment and what it means for your favorite digital assets. Market sentiment stabilizes as key cryptocurrencies see gains. Cryptocurrency markets are showing signs of stabilization, with major digital assets like Bitcoin, Ethereum, XRP, and Dogecoin trading higher. This uptick in sentiment follows a period of volatility, suggesting a potential cooling off or consolidation phase for investors. Analysts are closely watching these movements, providing insights into the short-term trends and long-term outlook for the market. According to trader Quentin Francois, Bitcoin has recently faced resistance at the $112,000 level, which was previously a support. This rejection confirms the resistance and indicates a bearish short-term trend, characterized by lower highs and lower lows. Francois suggests a potential downside target for Bitcoin around $106,500 or even $100,000. However, he maintains a bullish long-term outlook, viewing such a drop as a significant correction of approximately 20% from its all-time highs. Another perspective from More Crypto Online indicates that while Bitcoin has bounced, it remains below its upper trend line. The observed rebound is interpreted as a three-wave corrective move, implying that the risk of further declines and lower lows is still considerable. In the altcoin space, trader Ted Pillows notes that Ethereum has experienced a notable bounce, gaining 7.7% from its support level at $4,300. A push towards $4,800 could represent a strong upward movement for the asset. However, Pillows also cautions about the possibility of a higher low formation or a retest of the $4,300 support level. Meanwhile, CryptInsightuck observes strength in XRP, citing a bullish relative strength index, RSI, cross, and the absence of structural damage despite recent pullbacks. A positive daily close has been recorded, but confirmation through another day of strong price action and volume is deemed necessary to signal a definitive breakout. Further insights come from Blunt Capital, which points to an ascending triangle breakout for Solana, suggesting that the asset's 36-day ranging period may be nearing its end. Analyst Ali Martinez predicts that a break above 23 cents could trigger a significant rally for Dogecoin. These varied analyses underscore the nuanced conditions within the crypto market, where different assets are exhibiting unique patterns and potential trajectories. The overall sentiment appears to be cautiously optimistic, with traders and analysts looking for confirmation of sustained upward momentum. The market is navigating a complex landscape influenced by technical indicators, macroeconomic factors, and investor sentiment, making it a dynamic environment for all participants. But the market's movements are just one piece of the puzzle. We're also looking at some bold predictions about the future economy and what it means for Bitcoin's role. Analyst warns of Weimar Lite decade, cites Bitcoin as hedge. Financial analyst John Pompiano has issued a stark warning about the potential economic trajectory of the United States, predicting a coming decade characterized by currency weakness, rising inequality, and inflated asset prices, a scenario he terms Weimar Lite. Pompiano's analysis, shared in a recent podcast interview, links these potential economic shifts to current U.S. monetary policy, particularly the Federal Reserve's actions and communications, and positions Bitcoin as a crucial hedge against these impending challenges. Pompiano attributes Bitcoin's recent price correction to two primary factors: seasonality, noting that September has historically been a weak month for the cryptocurrency, and a broader market downturn affecting risk assets like the S&P 500. He views this correction not as a cause for alarm, but as a healthy market reset that helps to clear excess leverage, thereby building a more stable foundation for future growth. Despite the current pullback, Pompiano maintains his projection that Bitcoin could reach $150,000 within the current cycle. He anticipates that increased corporate treasury allocations to Bitcoin will be a significant driver for the next rally, injecting billions in new demand and attracting greater mainstream attention. Regarding monetary policy, Pompiano interprets Federal Reserve Chair Jerome Powell's recent remarks as an indication that interest rate cuts will commence in September, driven by considerable pressure on the central bank to ease financial conditions. He challenges the Fed's rationale for potential easing, arguing that official employment data does not fully capture productivity gains stemming from advancements in artificial intelligence and digital systems, which he believes indicate a stronger underlying economy than currently reflected in statistics. Pompiano's long-term, Weimar Lite prediction stems from his expectation that continued rate cuts and monetary expansion will inevitably lead to a weakening of the U.S. dollar, exacerbate wealth inequality, inflate asset values, and diminish housing affordability. While he does not foresee hyperinflation, he warns of significant market distortions. In this projected economic environment, Pompiano highlights Bitcoin's unique characteristics, particularly its fixed supply, as making it an ideal hedge against currency debasement. He argues that Bitcoin's responsiveness to global money supply growth positions it as a key asset for preserving wealth in the face of potential currency devaluation over the next decade. The analyst's perspective is echoed by other market observers, with crypto analyst Bitcoin Hyper outlining a potential bearish scenario following a recent drop, suggesting a possible short-term rally to $119,000 followed by a deeper correction toward $108,000 or even $18,000 in a severe case. Ryan Lee, chief analyst at BitGet, forecasts Bitcoin trading between $112,000 and $118,000, citing profit-taking and cautious sentiment, while also noting the potential impact of macroeconomic factors and high leverage in futures markets on price volatility. But it's not just about predictions and economic forecasts. We're also tracking the immediate market action, including how Bitcoin is performing against other major players and what the options market is signaling. Bitcoin underperforms Ether as August draws to a close. Options market eyes gains. As August nears its end, Bitcoin BTC is showing signs of underperformance compared to Ethereum, ETH, with modest gains in the past 24 hours that leave it potentially set to close the month in the red for the third consecutive year. Despite this historical trend, there are indications within the options market that a rally might be on the horizon before month-end expirations, offering a glimmer of optimism for investors. Bitcoin's price action over the last day has been relatively subdued, hovering with gains of less than 1%. This performance contrasts with the broader market indicators, such as the Bitcoin Bulletin 20 index, which tracks the general market, and the Bitcoin Bulletin 80 index, which encompasses smaller tokens. Both have seen more significant increases, with the BB20 index up 3.2% and the BB80 index rising 4% in the same 24-hour period. This divergence suggests that while the broader crypto market is experiencing positive momentum, Bitcoin itself is lagging. However, the options market presents a potentially bullish signal. Bitcoin and Ether options valued at over $14.6 billion are set to expire this Friday. The max pain level, which represents the strike price at which the largest number of options would expire worthless, is identified at $116,000. This level is currently above Bitcoin's trading price. Consequently, options sellers have a vested interest in driving the price of Bitcoin higher towards this $116,000 mark to minimize their financial losses. This dynamic could create upward pressure on Bitcoin's price in the lead-up to the expiry. For the longer term, Bitcoin's technical indicators remain robust. The cryptocurrency's 200-day moving average has recently crossed above the $100,000 mark. Bitcoin has consistently traded above this key long-term trend indicator since late April, underscoring the strength of its overall uptrend. The 200-day moving average, which smooths price action over approximately 6 months, is a crucial tool for investors assessing market conditions, helping to differentiate between bullish and bearish trends. James Van Straten, a senior analyst at Bitcoin Bulletin specializing in Bitcoin and its macroeconomic interplay, previously developed expertise in on-chain analytics during his tenure at Swiss hedge fund Sedler, and his current work focuses on monitoring financial flows to understand Bitcoin's role within the broader financial system. Oliver Knight, co-leader of Bitcoin Bulletin's data team, joined in 2022 after a 3-year stint as chief reporter at CoinRivet. Knight, an early Bitcoin investor from 2013, also worked at a UK market-making firm and currently does not hold any crypto assets. Their combined expertise provides valuable context for analyzing these market movements and trends. And that wraps up our top stories for today. But before you go, let's quickly recap the biggest headlines. That was a whirlwind of crypto news. We saw political figures withdraw from a major Asian conference, market sentiment stabilizing with mixed signals across key altcoins, a stark warning about a potential Weimar Lite economic decade with Bitcoin as a hedge, and Bitcoin's current underperformance against Ether as the options market hints at potential end-of-month gains. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto updates, hit that notification bell so you never miss a beat, and let us know your thoughts in the comments below. You can also follow us on all our social media channels for more real-time analysis. We'll see you in the next one.